what you saw over that time frame was that revenues increased 58%. That's just a huge jump. Now, having said that, there are people who are going to say, and rightfully so, well, look, part of that was due to the inflation, and during that same time period, inflation did increase 31%. So, obviously, a lot of that 58% was a result of that, but nonetheless, revenues increased at almost twice the rate of
And just as
inflation.
a standalone, the fact that revenues went up by that amount seems to completely disprove the idea that it's depriving these tax bills have deprived the government of needed revenue because there've been revenues coming in. It's what's going out that's the bigger problem.
Right. I mean, and just to give you a sense, over that same time period, spending has gone up 76%. So when you have spending going up at that rate, of course, it's going to be hard to keep
Yeah.
up with it. So, but to show you in terms of at the individual level, what's happening in terms of revenues, individual tax revenue increased 67%. Right? That's just a huge number. But if you remember, the corporate tax rate got cut from 35 to 21%. Everybody's saying, well, corporations then are going to be paying so much less. Well, actually, corporate tax revenue increased 52%. Right. And so, in fact, what happened because the economy was beginning to improve as a result of what? Having the private sector have more resources to generate more economic activity, and that's what happened.
And also, as part of that, with the corporate rate being lowered from the 2017 bill, that US companies came home, that we don't hear much about outsourcing being a problem like we used to because the corporate tax rate is now a very competitive rate. And so US companies have more reason to want to be here. It has worked incredibly well.